Here's a summary of the Adobe Q4 2025 earnings call transcript, designed for clarity and conciseness when read aloud. Good afternoon, everyone, and thank you for joining us. Today, we'll recap Adobe's strong performance for fiscal year 2025, highlight key financial metrics, discuss our outlook, and address significant factors shaping our business. Overall financial performance. FY25 Adobe delivered outstanding financial results in fiscal year 2025, driven by significant AI-influenced and AI-first innovation. We achieved a record revenue of $23.77 billion, representing 11% year-over-year growth. Our non-GAAP EPS was $20.94, a substantial increase. We also generated over $10 billion in operating cash flow, demonstrating our strong financial discipline. Key financial metrics and highlights. Digital media. This segment saw revenue of $17.65 billion, also growing 11% year-over-year. Ending digital media ARR reached $19.2 billion, up 11.5%. A significant portion of this growth, over 75%, came from subscriptions and cross-sell/upsell. Digital experience. This segment generated revenue of $5.86 billion, a 9% increase year-over-year. Subscription revenue here grew 11%. Total Adobe ARR. Our total book of business, representing Adobe's ending ARR across all customer groups, reached $25.2 billion, growing 11.5% year-over-year. Q4 performance. In the fourth quarter specifically, we achieved revenue of $6.19 billion, up 10% year-over-year. Non-GAAP EPS in Q4 was $5.50. AI impact. New AI-influenced ARR now exceeds one-third of our overall business, a testament to our strategy of deeply integrating AI. User acquisition. We saw significant new user acquisition across individuals and enterprises, with total monthly active users, MAU, growing over 15% year-over-year. Notably, Acrobat and Express MAUs surpassed 750 million, a 20% increase. Management's forecasts and outlook. Looking ahead to fiscal year 2026, we are targeting total Adobe revenue of $25.90 to $26.10 billion. We project total Adobe ending ARR book of business growth of 10.2% year-over-year. This translates to approximately $2.6 billion of net new ARR, our highest beginning of year guide for total net new ARR. We are also targeting a non-GAAP EPS of $23.30 to $23.50. For the first quarter of fiscal year 2026, we expect total Adobe revenue of $6.25 to $6.30 billion and non-GAAP EPS of $5.85 to $5.90. Significant risk factors. While confident in our outlook, we operate in a dynamic market. Key considerations include macroeconomic conditions. Our forecasts are based on current macroeconomic assumptions, which could fluctuate. Competitive landscape. The technology landscape is evolving rapidly, and we must continuously innovate to maintain our leadership. Integration of acquisitions. The successful integration of strategic acquisitions, like the recently announced intent to acquire SEMrush, is crucial for realizing projected synergies. Key highlights. AI innovation. We are leading the way in AI innovation with conversational and agentic interfaces, custom model creation, and seamless AI integration across our flagship applications. Ecosystem partnerships. We've established strong partnerships across leading AI ecosystems like AWS, Azure, and Google Gemini, offering customers choice and flexibility. New product launches. Innovations like the Firefly Image 5 model, Acrobat AI Assistant, and Adobe Express's AI capabilities are driving strong adoption. Enterprise traction. Enterprise customers are increasingly trusting Adobe to deliver AI value across their workflows, evidenced by record bookings of deals over $1 million and significant growth in customers with over $10 million in ARR. SEMrush acquisition. Our intent to acquire SEMrush will enhance our brand visibility solutions for marketers, addressing the growing needs in the AI-driven search landscape. Lowlights. No specific lowlights were explicitly mentioned in the prepared remarks. The focus was overwhelmingly on strong performance and strategic advancements. Most important statements from management. Shantanu Narayan, Chair and CEO. In fiscal 2025, Adobe delivered significant AI-influenced and AI-first ending ARR, which accelerated through the year. We achieved record revenue of $23.77 billion and non-GAAP EPS of $20.94, which represents outstanding financial performance. Our vision for business professionals and consumers is to deliver AI-driven, quick, and easy applications that enable them to be creative and productive. For creators and creative pros, our vision is to deliver the most comprehensive, power, and precision applications. We're transforming the enterprise content supply chain. We have the most comprehensive vision for marketing professionals. This is the foundation for our FY 2026 total Adobe ARR growth target of over 10%, and we're focused on accelerating this momentum beyond FY 2026. Adobe is well-positioned to seize the immense market opportunities that we are creating, driving continued growth and shaping the industry in 2026 and beyond. Dan Durn, Executive Vice President and CFO. In FY 2025, Adobe delivered record revenue of $23.77 billion, growing 11% year-over-year. We delivered over $10 billion in operating cash flows while investing in AI product innovation. For FY 26, we're targeting total Adobe revenue of $25.90 to $26.10 billion. Total Adobe ending ARR book of business growth of 10.2% year-over-year. GAAP EPS of $17.90 to $18.10. And non-GAAP EPS of $23.30 to $23.50. This total Adobe ARR book of business growth of 10.2% translates to approximately $2.6 billion of growth, which would be our highest beginning of year guide for total net new ARR. In summary, Adobe delivered another outstanding year fueled by strong global demand for our AI solutions across business professionals and consumers, and creative and marketing professional customer groups. Our disciplined execution and strategic investments position us to extend our leadership as we deliver an ecosystem of AI models, conversational interfaces, and agentic experiences. In summary, Adobe concluded fiscal year 2025 with a strong performance, marked by record revenue and significant AI-driven innovation. The company is well-positioned for continued growth, with ambitious targets for FY 26 driven by its comprehensive AI strategy, expanding ecosystem, and strong customer adoption across all its key segments. Thank you, and we will now open the floor for questions.